Hi there, hello everyone. Today I'm going to present before you another topic on fundamental analysis, economic indicators. What is PPI, Producer Price Index? So let's see what it is. Okay, Producer Price Index. It is a change in the price of finished goods sold by the producer. Okay, and this indicator reflects the change in manufacturers or producers' cost of inputs such as raw materials. And this is a USA based indicator published by BLS, US Bureau of Labor and Statistics. And we have two types of PPI, Producer Price Index. One is called Core PPI and the second one is called Simple PPI, and it is calculated month over month. And some more information about PPI. Core PPI measures the change in the selling price of goods and services sold by the producer excluding food and energy. So in core PPI we do not count food and energy. And in simple PPI, the PPI measures the change in the selling price of goods and services sold by the producers including food and energy. So in core we do not count food and energy items, but in simple PPI we include food and energy items. So what are the survey indices when we do PPI month over month? So each month approximately 100,000 prices, it includes products and services, are collected from 25,000 to 30,000 production and manufacturing firms. So they provide their input information on this survey, and from there this information is tabulated, and then we get PPI data figures. Okay, so PPI, Producer Price Index, when this data is released, then what happens that if actual figures are greater than the forecast, then it's good for the currency, and if actual figures are smaller than the forecast, then it's bad for the currency. And it is released monthly about 13 days after the month ends, and it is categorized as red news on forex calendar. And why it is red? Because it can have a greater impact in the forex market. Depending on its data release, the markets can be volatile and they can move positively and negatively, and from there forex trader have a chance to make money. They can also lose money. I mean, they have to carefully look at the figures and analyze their strategies. It is also called finished goods PPI or wholesale prices or PPI for final demand. So there are different names for this PPI. Okay. So PPI in short measures wholesale inflation, and it is compiled from producer prices. It is not compiled from consumer prices. So it is opposite of CPI, Consumer Price Index, where we actually count consumer prices, and it is opposite of where we actually look at wholesale inflation from producer prices, from producer's perspective. And then the data releases the data figures of producer prices. They can have an impact on gross domestic product and manufacturing and economic data. And if the figures or data is positive, then it can have a positive impact on the economic output, and as a result the employment can increase. And if the figures or numbers are negative, then it can have a bad impact or a negative impact. The economic output can slow down, and as a result the employment can also go down. So this data of PPI can be measured month on month, quarter over quarter, and year on year. So this is how it is calculated. And then we have PPI outcomes. Regularly falling data figures could indicate weakness and the risk of a possible recession. And then if there is a strong data month on month basis of PPI, then it can show an upward and strengthening economy. Okay. All right. So what happens when there is a data release about PPI? So everybody is waiting for that. So let's see what happens. So it can have a possible output of the producer price index data. So either it can come as above expectations or below expectations. Either way, it could go up or go down. So when it happens, then what is the result? So it could have a positive or negative effect on US dollar and US dollar driven markets. Okay, so this data is very important. And then what could be the possible outcome from this output? So if PPI data is better than expected or lower than expected, so if it is better than expected, then we can see there's a strong US dollar and it is better and strong against other currencies. And if it's lower than expected, then we can see US dollar is weakening against other currencies in the market as well. So what will happen for the traders? What the traders have to do with all these things? I mean, for traders trading, the data can be an important yardstick for analyzing their spread betting or CFD strategy. So this is very important based on the data releases. If it's in a positive side or a negative side, the traders can do their analysis based on the impact of the data release. Okay, so what are the trading strategies when the PPI data is out? How to trade? So definitely there will be a volatility. You will experience volatility in the forex market. Prices will move up and down, and then there can be sudden price movement, and in that case there will be an opportunity. Either you can trade into profit or trade into losses. So you have to make sure that you are reading the numbers correctly, you are doing all your contextual analysis, so that you take a confident trade that ends up in profit rather than going down the drain into losses. So that's how it happens when the data is out there in the market. Now secondly, there can be three trading strategy scenarios. Scenario one, so trading on sharp move. So as soon as the data comes out, so the market reacts quickly. So there can be sharp moves in the financial markets, both up and down. So remember, never trade on sharp moves. We also call it a knee jerk reaction. So that could be very damaging because you never know what's going to happen. So the rule of thumb is when there is a data release, there is a sharp move, so never trade on sharp moves. Okay, scenario two, you have to wait and fade the initial reaction. It involves that one should wait for the initial movement of the price and then see where the price comes back to its normal position, and then you try to take your trade. And number three, you also look at the pullback strategy where the price pulls back and then makes a move. And this approach where the price has moved sharply up and down and then reverses its direction. Okay, and you wait for the pullback and then take a position accordingly. Okay, so when you are doing all this, you are applying your trading strategies, then definitely there comes risk management with it. I mean, you have to have your risk management in place. So when there is a volatility, when there is a data release outside in the market, then definitely the market will face volatility and it could lead to profit or loss. So that could also lead to large short-term profits and greater short-term losses. So this is what happens, and then you have to do your risk management accordingly. So it's important that you pay attention to your risk management approach, and you must have some risk management action plan if something does not go right as you had initially expected. So this is how, guys, is an overview of PPI, producer price index, and what happens when the data comes out and how you need to trade on this data as a forex trader in the forex market. I will conclude here. I hope you like the video. I will see you next time. Have a good day. Bye bye.